Hi, welcome. It's Mary Ellen McGonagle with your Daily 5 for Monday, October 11th. For those not familiar, I do have quite a bit of experience both on and with Wall Street. I started out on the trading desk at Goldman Sachs and from there went on to manage over $2 billion in assets at another large asset management firm in New York in fixed income. But things got really interesting for me as it relates to equities when I joined William O'Neill and Company, where I worked with top portfolio managers and analysts, teaching them the O'Neill methodology that's all about uncovering big winning stocks just as they're poised to take off. Since then, I've founded my own investment research firm, MEM Investment Research, that's currently being powered by Simpler Trading. And with that, I'm the author of a top-performing bi-weekly newsletter, the MEM Edge Report. I'll be offering a special offer for you to trial that report at the end of this presentation. And for those interested in more information, go ahead and check out my website, meminvestmentresearch.com. Today, we are going to be focused on stocks that are due to report their earnings over the next 2 weeks. And I'm sharing with you here a quote from Bill O'Neill that states that the primary driver of a leading stock that goes on to far outpace the markets is strong earnings growth. So let's take a look at these 5 setups. They're not normally chart patterns I would be attracted to, but they do have other characteristics that make them quite compelling. First up, we are looking at Domino's Pizza, DPZ, and the company has been reporting earnings growth over the last 40 quarters, and the last 2 quarters are no exception, where their second quarter earnings came in well above estimates. The stock had a huge boost from that, but more recently, over the past 2 months, has been in a generally declining phase, and this is all about restaurant stocks in general. We can see that the stock did find support at this late July low and seemingly is in the beginning stages of reversing this downtrend. From my work, I will need to see the stock break back above these simple moving averages with positive momentum indicators. The RSI currently is in negative territory. We'll want to see that up above 50. And likewise with your moving average, convergence, divergence, I will want to see that black line up through the red and eventually trending up here above 0. The company did receive a price target upgrade last week, which is generally quite bullish going into earnings. Also, you will want to see same store sales numbers improve as well. What we're going to be on the lookout for is a reversal similar to this early March into early April, when the stock did break above these moving averages with an MACD that's above now net neutral, and then also an improving RSI, which in turn led to a significant uptrend from there. Next up is Steel Dynamics. They are due to report their earnings next Monday, and you can see that this stock as well has been in a generally declining phase. This is all about steel stocks in general. However, I did want to point out that their last 2 quarterly earnings numbers were really quite strong. Steel prices have quadrupled over the past year due to high demand, and going forward, analysts are anticipating even higher demand as auto manufacturers get back on track, when semiconductor chips become more plentiful, and then also infrastructure spending should drive steel demand higher as well. STLD is opening a new mill in the 4th quarter, which is also expected to improve their earnings growth outlook. But for now, next Monday, we will want to see not only strong earnings, but again, the stock break back above these simple moving averages, the 21 and the 50-day, with your outside momentum indicators ideally turning positive as well. We can go back historically when that MACD crosses from this lower level. You can see the lengthy increase that the stock had subsequent to that. And of course, with earnings as your driver, we are going to keep an eye on this name. Next up is Dover Corp, another generally downtrending stock, all about industrial stocks coming under distribution, but we can see that the stock is beginning to post higher lows. That's constructive. We will need to see more work here with the RSI turning positive, likewise with that MACD having a bullish crossover and then trending up above this net neutral zero. The compelling item here is the fact that the last 2 quarters, Dover came in with very strong numbers. You can see the nice bullish response subsequent to that, which most recently pushed the stock into a nice uptrend before group pressures pushed the stock downward. Next up is Charles Schwab, SCHW. The company is due to report this Friday on the 15th, and the company had their earnings estimates revised higher going into earnings, and that generally is a bullish signal. Also, a price target increase was released last week as well. Schwab's been voted as the most trusted online broker. They're viewed as the best in class, which in turn has driven growth within the firm. We can see it's poised to break out of this 2-week base. Your RSI and MACD in positive territory, so we will keep our eye on this one on Friday. Last up is a stock many of you may be familiar with, of course, is Tesla, TSLA. They are due to report next Wednesday, October 20th. I did want to share this with you, however, because this company also received a price target upgrade last week to $940 after the company held their annual shareholding meeting. Analysts were bullish on remarks made there. And then also the week before last, Tesla reported record Q3 vehicle deliveries despite a semiconductor chip shortage. And oftentimes these high or strong vehicle delivery numbers do translate into a strong quarterly earnings number. So we will keep this one on our radar as well. And as mentioned, here's my offer for you to trial my MEM Edge report. You can go to my website, meminvestmentresearch.com, for a 4-week trial of this bi-weekly report that's all about getting you in front of these big winning stocks through identification of where the strength is in the markets and then drilling down to uncover those big winners. We've been heavily weighted in energy and financial stocks here of late, with an eye toward some of those other industry groups to then join the party, if you will, and earnings season might just do that. So take a look at this MEM Edge report, and until next time, thanks for watching your Daily 5.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.